So, Kevin, we are in an interesting time right now with everything going on with Bitcoin. We broke 60K. We look like we're going up. China is not just about to unban Bitcoin mining, allegedly, but also they're taking measures for their economy with quantitative easing, different other measures. How do you see it going? Where do you see the markets going? Is this beneficial, or should I say, how is this beneficial for Bitcoin and other sectors?
Thanks, Paul. So let's see, let's take it from the top. So China, everybody knows, anybody that's been in crypto longer than a minute knows China has played a big role ever since, let's say, the first bull run, literally. Why? Well, back in the day, people wanted to move money out of China. China stops people from moving over 50K out of China. They have a lot of rules that stop people from moving funds. Bitcoin was a way around that. Then Tether after that. But anyway, so Bitcoin was the way out. Then notoriously, they didn't like Bitcoin. They liked Bitcoin. They didn't like Bitcoin. They didn't like Bitcoin. They kind of went back and forth. Now, still 55% of all mining sits in China. Now, you can speculate that that might be just small miners, meaning people in their homes, or you can speculate that that's mostly the government. I would
Which
say
is why
that
they wanted to stop it in the first place.
correct. I would say that if you're speculating somewhere in the middle, meaning some of that's households and some of that is the government, you'd probably be accurate. Now, they have AML rules coming out that specifically mention cryptocurrency. Why would they do that if they thought that their ban was working? And if they know their ban isn't working and they have to protect so-called money laundering, then more than likely they're leaning towards unbanning. But what they want to make sure is, one, that they're on par with, say, the rest of the world in terms of policing Bitcoin. And that's what they're doing now. So I would say, all in all, that's bullish. Not to mention, we have kind of a perfect storm of the 4-year cycle is ready to kick off literally tomorrow or whatever in October, right? So we're there basically. You have U.S. elections. You have a very tumultuous U.S. election. You have speculation that a Republican's going to win the White House. All those things together mean bullish, or all bullish, I guess, at the end of the day for crypto. Every single one of those things.
China is also the second biggest economy in the world, and when they start printing money, that actually significantly impacts the rest of the world. And they're not just printing money; they're giving money for stock buybacks. They're doing a whole bunch of stuff. Can you talk to us a little bit about that and how could that affect Bitcoin, not just as a high risk investment at this point, maybe also as a hedge with everything going on, because this could actually lead to drama as well. And maybe we want to talk about that as well.
Absolutely. So at the end of the day, any stimulus, right, in any country, whether it be China, whether it be the US, whether it be in Europe, stimulus usually ends up invested in some way, shape, or form.
Yeah.
Now, you mentioned high risk with Bitcoin, right? So definitely the last bull market, definitely the bull market before that, definitely. So we're talking 4, 8, 12 years ago, 16 years ago. Throughout almost that entire time, Bitcoin and crypto at large was considered very high risk. However, now we have ETFs with Bitcoin, we have ETFs with ETH, we have a completely different look. BlackRock has publicly said, well, obviously they have an ETF, but they've publicly come out and talked, pretty decent about Bitcoin, right? They're not bad mouthing as they were. They're not saying it's a gamble. They're not saying it's a Ponzi scheme, which they absolutely did in the past, by the way.
Oh, yeah.
And so all that really means is volatility at some point, maybe not this cycle. I don't think it's going to happen this cycle, but in cycles to come, volatility is going to start to die out because massive amounts of institutional money will flow into Bitcoin. Now, when you come with stimulus, yes, people generally invest stimulus some way, shape, or form. Now, in high risk assets, a little bit of stimulus usually goes in high risk, 5%, 2%, 1%. But considering that Bitcoin maybe not high risk on most people's portfolio, or the highest risk as it was 4, 8, 12 years ago, I think a large amount of money, let's say even a quarter of stimulus money, could make its way indirectly or directly into the crypto markets, whether that's through going on an exchange and buying Bitcoin, or whether that's getting exposure to mining companies, whether that's getting exposure to companies that have tokenized themselves in one way, shape, or form. This market still isn't probably the size that you would call it, a behemoth in terms of markets around the world, but it is poised to pick up a ton of capital. This bull market that we're all expecting start October into maybe 2026. And then, for years and years and years to come.
What about not the theory, that's not the right word, but if a large country like China does stimulus, wouldn't other countries have to follow to balance it out? Can't that make an effect where other countries also have to print, raising the chances or the chances is a good enough word of U.S. also stimulating and so on.
Yeah. So yeah, the probability. I think you were searching for that probability.
Probability.
Yeah. At the end of the day, central banks have two buttons. They have two different buttons on three different dashboards, right? So basically, when it comes, they're either printing or not printing, and they're raising or lowering interest rates. Then the other two buttons are like run out of the room or duck and cover. I mean, those are the six buttons. And so when it comes to when large economies start to change from, let's say, higher to lower interest rates, when they push stimulus, when they go from quantitative easing to quantitative tightening, et cetera, it does put pressure on other currencies around the world. Now, I guess the unique thing about China is that their currency is very much manipulated by the internal government. And so it has a little bit less effect on the global economy, but where it does really sting is imports and exports. So China is a massive exporter, we all know that, but they're also a massive importer. And so they're definitely a bigger exporter than importer, but they're still, they do both, right? They're on both sides of the economy. But when it comes to export, everybody in the world buys stuff from China. And so if that stimulus starts to move the exchange rate, or prices simply start to go up or down based on inflation, that affects the rest of the world. Either they're buying more or they're buying less from China, or they're exporting more to China or importing more. So that can definitely lead, because China is such a big economy, that can definitely lead to other countries having to make changes in their own fiscal policy. I think China knows, like I guess everybody else, but China knew at some point, probably in the last 3 to 6 months, that the U.S. was going to start cutting interest rates. And the U.S. being their biggest trading partner, they want to jump the gun a little bit here. U.S. already went down by 0.5 basis point. They know that probably we're going to see 3, 4, 5 more cuts of similar size, and they want to jump in front of that bullet, because the U.S. being their biggest, I guess, customer, you could call it, they definitely want to make sure that they're still able to profit and see large amounts of money inflowing into China. So I guess it's maybe inverse to what you mentioned, but absolutely, when any big country starts to do anything, every other major country, G7, G20, whatever, is eyes on the prize. And definitely U.S. and China they get the most eyes because they're the two biggest economies in the world.
Now, I had a theory. I was actually talking about this last year, that there would be, right now, the U.S. is cutting interest rates. And historically, most of the time, not every single time, but historically, every time they raised rates aggressively, then cut them, it led into a recession. If we have a little bit of a thought process here, okay, let's have a little brainstorm. Right now we're having elections. There are two bipolar governments. One is pro-crypto, one is anti-crypto. It doesn't matter how much they say they're pro-crypto, they're not. Or at least it won't be pro-crypto, or at least not the way they think it is. If you take the rates cutting and maybe the election results into play, could this lead to a recession or shorter bull market? Let's have a look at the bearish look here, the bearish side of things, because you have to look at all sides always. Sure. What do you think?
So, I would say that the U.S. economy in general was in recession for some time, even though it wasn't publicized, I should say, that the U.S. economy was in recession. The funny thing about an election year is obviously when you're the incumbent, when you're the party that controls, you don't want bad news coming out. You want to get reelected.
Exactly.
But you absolutely want bad news to come out about your opponent, right? So you also want to try and position anything you can to potentially harm your opponent once they take office, right? So you're right. In many times in the past, when there's been rapid interest rate deductions after, years and years of high interest rates, the 1980s is a good marker that you can check. The interest rates hit, I think, 15, 16% in the 80s, and there was a rapid reduction, which led to the 90s recession.
Right.
And so, yes, that's definitely possible. though that usually takes some time. It's kind of like, it's like your grandma's, if you're Italian, it's your grandma's pasta sauce. If you're, I don't know, Russian, it's her
Six
goulash.
months, 8 months.
Huh?
6 months, 8 months after election, if this happens.
Well, generally speaking, so let's assume both potential options. You have the Democrat Kamala Harris winning the office. That's going to be bad for markets almost initially. You're going to get a knee-jerk reaction that will be negative. You probably will see prices generally return to where they were relatively quickly, but you will have stagnation for at least several months while people try and figure out what exactly the policies are going to look like and whether or not they should be investing. Right. So that's, other news can propel the market as well, like further rate cuts, et cetera.
Right.
With a Republican winning office, or Donald Trump in this case,
it will shoot up too fast.
It's going to shoot up. It's going to be a knee-jerk reaction to the upside. There'll definitely be profit taking. Now, with the advent of ETFs, the difference here is what used to happen in crypto is that Bitcoin profits would be taken and pumped into alts.
Yes.
But, if your grandfather bought 3 Bitcoin through a BlackRock ETF and he gets his profits, going to go to his Bank of America account. Right? He's not going to buy, Dogecoin with it.
Very true.
And so that can affect, I guess, the swiftness of the cycle. It could even extend the cycle. So we don't have a 4-year cycle. Maybe we have a 6-year cycle now. Maybe, or, there's many different things. It could also shorten it, right? So just like you said, it could be a shorter bull market, but then that could also lead to an almost non-existent bear market, meaning the bear market is really just a correction like we would see in stocks or any other, let's say, traditional market. My money is on probably the Republican winning the White House, and for no other reason than markets like certainty.
Yes, exactly.
And while they might not like Donald Trump per se, they have no idea what a Kamala Harris, 4-year term is going to look like. No idea, zero. They kind of have an idea what Trump.
Kamala.
Yeah, they kind of know what a Trump term is going to look like. They saw it already, and it was good for them. The guys with money during the last Trump term did well. And so, they're not going to be too worried about that. So I do think we're going to see a Republican victory. With a Republican victory, I would expect, between 3 and 6 months of kind of just a heightened craze around get my money in the market. Yeah. And that coincides with the normal, normally we see Q4 into Q1, bullish, Q2, Q3, stagnation, Q4, Q1, 2026, super bullish. And then normally there's a cliff. Yeah. Now, the question is the cliff. Because again, if Bitcoin is less volatile, even if the rest of the market is super volatile, we more than likely won't see such a cliff, meaning you won't see such a stinging bear market after a bull market. That's what it looks like right now, at least in my crystal ball.
Very interesting. And and when I was in my shorter bull market thesis, the truth is I actually anticipated Bitcoin going up faster pre-halving. I had no idea it would reach all-time highs. I just thought it would happen faster. But then we had that long consolidation to the downside where I said, okay, we're back to 50-50 now. I don't know. Whilst before I was like almost certain we may have, or there was a chance we'd have a short the bull market. Now we're back to I don't know. There's too many variables, too many things going on at the same time. Now you mentioned something extremely interesting, Kevin. You mentioned something about altcoins may not being the same or coming in later in the market, and we've already seen kind of a glimpse like that of that. But you being the CEO of a major exchange, CoinMetro. You see inflows, you see what's going on. I'm sure you have friends that also have exchanges. Do you see people coming into altcoins, or what do you see going on? And do you see an alt season eventually coming, or are we going to have mini alt seasons, if that's what we can call them, which we've seen up to now?
So if I fast forward really into the future, say 5 years, 10 years in the future, I think altcoin markets are going to mimic something like pink sheets, penny stocks look like, and just your broader equities markets, meaning that you will have baskets that do well. And we started to see that already, right? Earlier this year, we had the AI basket do extremely well. For what reason? No reason. But people, generally speaking, when a narrative goes out in the public, and the thing about crypto versus, say, the stock market, unless you're talking about meme stocks, is that crypto is a young man's game. And the young guys are all on social media. They're on Telegram. They're on Discord, and they communicate fast. And so markets can move just as fast. You don't see, your grandfather or your great uncle Tom sitting on, Discord talking about GE stock, right? That doesn't happen, and that's why the markets are the way they are. But what it shows is where the power in community, because when community came to the stock market, we had meme stocks.
Right.
We had stocks move quicker than the market has ever seen, simply because there was some guy talking on Discord and sounded like he knew what he was talking about, right? So with that, now if we move back to where we are now, we are starting, with the advent of ETFs and more institutional. We've talked literally years ago about institutional money removing volatility from the market, and that's what's going to happen. Why? Because the more money that flows in, you have more experts that are buying and selling. You're not getting peaks and troughs like you do with retail money, because if something goes up 20, 30%, an expert takes profit. Whereas, you or me might sit on our hands and go, oh, this is going to go up another 10x. I'm going to wait. They don't do that, right? They're taking profits, and they're doing it in a systematic way. And they're also going to take losses in a systematic way. That reduces volatility. Now, if you go to a Bitcoin conference, let's say, it wasn't Bitcoin Miami this year, it was, I don't know, Bitcoin Tennessee or something. But Bitcoin Amsterdam just happened, etc. Everybody in there says, we're not in here for the money. It's all about, it's either the tech or it's, what.
Of course.
Nonsense.
Yeah, of course it's nonsense.
But, because if Bitcoin was 3 cents, there wouldn't be a Bitcoin. There wouldn't be a
Bitcoin Miami. There wouldn't be a Bitcoin.
If the conference ticket was 10,000 Bitcoin,
there'd be a pizza party.
Yeah. So, but the point is that all these retail guys and all this retail flow are there because of volatility, because you still have the ability to double, triple, quadruple your money with Bitcoin, right? When that becomes 10% a year, 15% a year, 20% a year, 50, 40% in a good year, most retail money, the vast majority, is gone, and it needs somewhere to go. And that adrenaline that they're looking for when they invest is going to be in altcoins. So what I think we will see is we're going to see a transition from Bitcoin dominance will probably not change that much in terms of the broader crypto market. It's always going to be a big piece of the crypto markets. Eventually, though, they may separate them. It might be Bitcoin will be commodity market,
then
and crypto will be everything else, right? But you're going to see dominance. However, as Bitcoin starts to slow in terms of its volatility, the people that are looking for the big gains won't even touch Bitcoin. They will be jumping in and out of micro caps to mid caps to small caps to whatever, back and forth. And we will something else will take Bitcoin's place in kind of the currency of the bull market. So, historically, you go into Bitcoin, make money, put it into alts, take that money, put it back into Bitcoin. Bitcoin shoots up, final hurrah. You take that set of profit, goes into altcoins, boom. And then you get your capitulation. So there's going to be another asset that takes that place. That's probably a few years away, and I do think these 4-year cycles will end. I think this might be the last traditional 4-year cycle that we've seen. I don't know what they're going to look like, to be honest. They could be shorter, they could be longer. They may be very much what, like you said, you'll have pockets, and it's going to be much more based on fundamentals. Yeah. And so rather than, oh my God, it's October, let me buy crypto because it's going to go up. Because that's where we are right now.
Pretty much.
That's where we are right now. Everybody's like, oh, it's October. Let me get out my calculator and do a couple thousand X's and see what that looks like. Right. Yeah,
go
that's where we are.
50X.
Yeah.
Yeah, I see the same thing happening. Although I do think that there will always be opportunity. Like if they may not be a 4-year cycle, but there'll be a sort of 4-year cycle, maybe with meme coins, maybe with other narratives, maybe with trend stacking. I mean, I was talking about AI previous bull market for this bull market, and that came out, and then trend stacking principles. It had to be gaming with AI. I mean, there's gonna always be something, but we have to be in front and see. So history rhymes. I try not to find what's going to be the same. I try to find what's going to be different. And it's hard, but it's a lot easier than trying to find, what's going to be the same thing. Let me ask you something about regulations now, because I know you're an expert in this, and we do have a lot of regulations coming up in Europe. For those of us or you that live in Europe, things are changing. A lot of people are leaving Europe, at least virtually, if not in person, maybe with an offshore company or something. My question is this. There's something coming out, I can't remember the name of it, in 2026. It's already passed. And it has to do with credit exchanges. I can't remember what it is exactly, but everyone has to report to your government in your country any crypto assets that you get or exchange. So if I have a crypto debit card and I've been spending, I don't know how much money till now, when that law comes out, I don't know if it's from thereafter or if the before is counted as well, but that credit card or that debit card will have to report to the government, your government that you are in or where you're a citizen of, exactly what you've been doing or do. Can you tell us more about that and what's coming?
Sure. So there's a lot of things coming. So what you're talking about is essentially just automatic sharing between tax authorities across the EU, right? The exact acronym escapes me right now. You're right. It's January 1st, 2026. There's also DARPA, which is more focused on the tech rather than the monetary side. And DARPA is already in force across some portions of the EU, and in some countries it won't take effect for another 6, 12, or 18 months.
That has to do with AI, I think?
So it has to do with crypto, AI, blockchain. Well, blockchain, let's say the what underpins crypto, and also AI, and any other real, let's call it innovative technologies. But it is the first time we're seeing any type of really collective regulation on the EU level, really almost anywhere in the world, based just on technology, which is a bit scary, to be honest, but it is what it is. Then you have MiCA, which is markets and crypto assets, which is the big one that's, again, already officially kind of started, but most EU countries are giving either till sometime in 2025 or sometime in 2026. For example, Estonia has pushed the deadline out to June 2026 for already regulated entities. But those, so when it comes to the tax in general and tax reporting, I guess we all should have seen this coming, given the fact that it's like this for any other asset class. Now, well, when I say it's like this, the laws are in place. Does that mean that every single transaction you do is automatically reported and your tax authority sees it and then is ready to audit you? No, not necessarily. And so now that I'm not telling everybody not to, pay your tax. Make sure you pay your taxes, pay the amount you're supposed to pay. Don't try any tricks, don't pull any tricks up your sleeve.
Right.
But in reality, a lot of automated tax sharing is kind of like, a good analogy would be if you've ever seen like a cartoon from the 80s or 90s, picture that guy that's sitting in his office and he's like, somebody comes and brings him one notebook full of shit and he sees it. And then he grabs it and he's like, oh, this is it. So he goes through it. An hour later, he's done. And then someone comes in with 3 more, 10 more, 15 more, 100 more, 1,000 more.
Right.
Yeah. So it's automated, but not necessarily usable information. But if the tax authority wants that information, like they want to audit you, or they believe you may or may not be filing correctly, they have the information. So the idea for the crypto regulation is that all exchanges will have to automatically share basically name, date of birth, tax ID number, places where the person has said that they are supposed to file taxes. So they're kind of, they themselves have said, okay, I file here, here, and here, along with all their transaction information. And I believe it's done, I think, either monthly or quarterly, and it might even be in real time. I think it's monthly or quarterly, I think is what they settled on. And that's probably going to change as well as we get closer to kind of launch.
Now, these are European exchanges or exchanges that have a license in Europe, even if they're abroad?
Well, if you have a license in Europe, you'd be considered a European exchange. So definitely European exchanges, because they can enforce the law with European exchanges. However, I believe the wording of the law basically is if you have clients in Europe, you should be providing this information. But the authority doesn't really have the authority to be able to force an entity that isn't licensed and or domiciled in the EU to follow the rule. But that doesn't mean they might not go after and try to enforce it. So if there's a very large exchange that's not doing it and they believe that they're not getting the information they should, they definitely could attempt to go ahead and try and enforce it. But definitely for any exchange domiciled and or licensed in Europe, it's going to apply and it will be enforceable.
When this happens, will and I like the way you say that it will probably require a certain threshold for somebody to actually audit and go out. They're not going to audit everyone simultaneously in your European Union unless everything's AI. It will take a lot of years, right? So at least how I think things work, right? It takes a lot more. It's not that doable.
Yeah, you need to do something normally to be on the radar.
Right. Now,
So
if somebody has a debit card, because I know there's a lot of people like this that have debit cards, whether it's Binance, whether it's crypto.com, whether it's whatever card there is out there, that and we're talking about physical cards, because if it's a virtual card, you probably don't have to go through KYC, at least not as much as you do for the card that you need for the ATM, whatever. The question is, if somebody's been using one of these cards and the law comes in, is it from when the law comes in and after, or will they backtrace and see? So does it make sense if somebody spent a few $1 million with a card to close that account and get a new one? If that makes sense.
So this is not tax advice.
It's
but
not
I
tax advice. It doesn't mean that, and we're not implying anybody to do this, but a lot of people are sweating in their sleep right now.
So I'll give you an analogy real quick, and without saying names, but so we all know of an exchange where just recently the CEO was and then just got out of prison.
Right.
Yeah? Now, one of the reasons for that really short sentence, I can almost guarantee you, is that the U.S. government now owns all the transaction and KYC information that sits in that exchange.
Right.
Now, very similar to this question about debit cards, et cetera. Now, whether you give KYC or not on a virtual or even a physical debit card, the amount of information that's shared every time you use it is quite substantial. That can be IP, that can be a device that you're using it from. They get a device ID, geographic location, time, etc. All those things, if they really wanted to, would give them enough information to potentially figure out who was using that card.
Okay.
Now, in order to do all this, it costs money and takes time. And so again, if there's no reason for them to be looking at you, they probably won't. As far as like kind of being grandfathered in when there's a law, and before that they don't care, after that they do. They're definitely going to care afterwards, that's for sure. Most of the time though, previous transactions related to anything prior to a new law generally aren't necessarily looked at. But that new law very well may give them the ability to go and request without a judicial warrant any information that's relevant to an investigation. So if you make one transaction on January 2nd and it flags something somewhere, I don't know, you bought some, of course not illegal, but some not illegal product on the dark web. And somebody wants to.
You didn't pay taxes for it. You don't have the funds to show that you made that money, and you didn't do taxes on it. I don't think anybody here is doing anything illegal. I hope not. We're talking about tax evasion here.
Yeah. So
which is illegal. It's pretty huge.
But yes. But I guess what I would say is that, and closing an account's not going to make any difference.
Right.
Because the information's already been spent, let's say. It's there. Again, I guess using the same card could give you a higher kind of flag, potentially a warning to an authority in that instance. So yeah, maybe you'd want to open a new account, but at the end of the day, that information isn't going anywhere.
No, it's there forever.
Yeah, even an institution that doesn't follow all the laws, so to speak, that they should be, normally will hold your financial information for at least 7 to 10 years after you close an account. And they do that, well, one, because of the laws or the regulation, but they also do that to protect themselves. So, yeah.
And so you can expect a lot of fines in Europe, basically, because I think that's what it means. If you spend 200,000 and you haven't shown a way that you made for 200,000, didn't pay tax on that, you're basically looking at a fine.
Or a tax audit and a fine, and the worst, and that tax audit's going to find that you made a lot more than you probably made, and then you're going to have for this. So the way tax authorities generally work is, if they're going to audit you, not in every country, but in many countries, they'll say they see you made 200,000 on this debit card, for example. Like, well, we think you made 4 million.
Ooh, okay, yeah.
Now you have to prove you didn't, which means you're going to show your actual transaction. Because you're going to have to give them information to disprove their ridiculous theory. And that usually leads to you paying what you should have paid, in the beginning, plus fines, plus whatever. So, yeah.
Okay. So basically, it depends where in the bull run you are. Does it make sense to pay the fine, or to hold Bitcoin for a while longer and 3 or 4x so you can pay
Yeah, yeah.
everything?
Easiest way to do this is, man, every time you make a transaction, especially when you withdraw money, just put 30% in an account. Put it in an interest-bearing account. But at the end of the year, or 20%, or whatever your tax bracket is, 8%, 5%, try to make sure that it's paid as dividends. Try not to get paid as earnings. Make sure you're structured. If you are spending 200,000 on a debit card, spend 15K with someone that knows how to structure wealth, and get them to do it right, and pay 5% and pay it
Very good
legally,
advice. I think everyone
and
should.
don't worry about it, because the longer you go without doing what you're supposed to do, the probability they're going to catch you is going to
Yeah, of
increase.
course.
And once they do, they're gonna make up imaginary numbers. If it's been 10 years since five, they're gonna say for 10 years you made more money than anybody's ever heard of, and you don't want to be in that position. So spend a bit of money, get yourself structured. It's going to be the best investment you made, especially if you end up making money during a bull run. Absolutely.
Oh yeah, of course. It's everyone needs to mature, and like in the beginning, like when we first started crypto, things were different. I mean, as far as we knew, there wasn't any taxes involved. But now things are changing, things are maturing, and I think we need to mature with it.
Oh, yeah, absolutely. I mean, definitely there were loopholes abound initially because, well, basically the authorities were saying, well, this isn't money. We don't want to regulate it. We don't care. Exactly. It's going to go away. It's a fraud. It's a scam, whatever. And so, yeah, if they don't want to recognize it, then how do you pay tax on it?
Exactly. You can't. I know somebody in a European country that actually declared that they made money with crypto. They paid capital gains. They bought a house with it, and then they got fined the full amount because we don't recognize this as money. We don't recognize it. Well, why did I pay it then? And you're forced not to pay. And there's going to be a lot of these cases because it's kind of weird.
Yeah. But now, at least in kind of the G7, when we talk about US, UK, Europe at large, you pay tax on your gains. I mean, that's it. There's no real question anymore. So you don't really have a defense at this point. Now, you definitely do have a defense if they try and audit you 5-6 years back and you say, well, look, 4 or 5 years ago, there was literally no information on what I should be doing when it comes to paying tax. In fact, many governments
still no information on that. It's still like a gray area in most European countries. I would argue it's a gray area until 2026 when MiCA actually comes out, or this DARPA actually comes out.
Yeah. Well, I can tell you in Estonia, definitely not. It's not gray. It's black and white. It's 20. You pay the same 20% you pay on everything else.
Right.
And it's a terrible because you pay on gains, but you can't write off losses.
See, for example.
Yeah. So, but it's very clear. Like there's no real question about it. I would say Germany's pretty clear on their tax. As far as I've seen,
yeah.
UK is fairly clear. France is very clear. Yes, there are going to be smaller countries in the EU that haven't put enough effort into making this clear because they probably didn't think that they were going to see a major amount of influx of taxes paid. But as they start to see this market grow larger, I guarantee you, they're going to be interested in taxing it. So, and then you have, candidates in the U.S. talking about, taxing unrealized gains.
Right. So, yeah, that's crazy. Like, yeah, that's. I don't think
the interesting thing there for me is that anybody that knows anything about U.S. history, so the Revolutionary War was fought over a 2% tax on tea. Not on income, not on your wealth, not on your pre-wealth. Tea. So instead of having to pay, 10 cents for a tea bag, it was 10.002 cents or whatever. And they went to war and died for a 2-cent tax on tea. And now U.S. is one of the worst countries in the world when it comes to their tax code, and nobody bats an eye.
Yeah. And a lot of this regulation that's coming, it's gonna affect, I think, Europe negatively in correlation to other countries. I mean, we saw it with AI, with the new iPhone, where everybody has AI features on the iPhone except Europe right now. So me right now, I have an iPhone 15. I was excited to get the iOS the 16 so I can practice AI. But guess what? There's no point because I can't use it.
Yeah, well, that's DARPA. That's exactly what
DARPA.
you just talked about. That's DARPA. So I think really it's the confusion about DARPA and not wanting to step over a line that hasn't quite yet been etched in the sand.
Yes.
So I believe more than likely the next iPhone release, you will probably see the AI features in Europe, or maybe even before that. But right now, because Apple just paid a ton of money for all different lawsuits around Europe, they don't want to pay a couple more billion for no reason. And so I think they're just sheepish. They don't want to delve down that road again. But I think that'll change. I think it's just confusion because DARPA is still not, well, like most laws, right? It's not very clear yet,
right,
on many things.
And we might even see changes in the laws in crypto and stuff over time as well.
Oh, for sure. I've never seen in Europe or elsewhere where there is a draft and then a final draft and then a date to go live, that it doesn't change quite extensively, because especially once it goes live, because unfortunately, most of the time that governments go through these processes to create laws, legislative bodies, they don't necessarily talk to people who are in the industry or in the business that they're trying to regulate. And when they do, they talk to a very small circle of people. And so when it goes into practice, it's completely different to what they envisioned. And then all the loopholes happen because they didn't think about this edge case, that edge case. It's like when you build anything when it comes to tech. You build something, what about that one guy who instead of clicking on the button is going to click over here and then go back two tabs and then click on this button, which causes this error to happen.
Right,
Nobody predicts those things until they happen. And that's basically what happens as laws are launched, especially in a region as complicated as Europe, because you're launching one directive, one law for 26 different countries.
Exactly. Kevin, thank you so much, man. Always a pleasure. Check out the links in the description down below for CoinMetro, one of the best exchanges in Europe. Kevin, thank you. I look forward to seeing you again in our next show.
Same, Paul. Same. Cheers.
Thanks.